Today let's discuss the equity investment strategy. Well, equity means stock. I think most of you are finance background. Okay, most of you have finance background. So those very easy concepts I won't spend too much time to discuss. Okay, for example, the equity, also known as a stock or share, it means a kind of ownership of a company. If you own the stock, you are the shareholder and stockholder. Okay. There are two primary types of equity security. The first one is the common stock, 普通股, common stock. Okay, so common stockholder, if you are a common stockholder, you may receive dividend. If the company have profit this year, if the company have the profit this year, you might receive dividend. But it all depends on the company. Okay, if the company want to plan to distribute or to pay dividend to shareholder, you will receive the dividend as a stockholder. But these payments are not guaranteed. Okay, are not guaranteed. Even though the company has a profit this year, the company might decide not to pay dividend to a shareholder, as long as the company have a kind of expansion plan. Okay, expansion plan, and the company need more capital to expand. Okay, it can decide not to pay dividend. Okay, so this is the common stock. There is another type of stock ownership, which is preferred stock, 特别股, preferred stock. Okay, so these are the represent ownerships, but do not usually come with the voting right. Okay, so normally, if you are preferred stock holder, normally you won't have the voting right. Okay, if you are a common stockholder, you you will have voting right, 投票权. Preferred stockholder receive dividend at a fixed rate. This is the advantage of the preferred stock. Okay, it will receive dividend at a fixed rate every year, even though the company did not have profit this year. The company still have to distribute dividend to preferred stockholder. Okay, at a fixed rate. Okay, at a fixed dividend every year. Okay. The equity investment, if you invest in equity, it will carry a higher level of risk. They also offer the potential for higher return over the long term. Okay, it carry higher risk, but it also has the potential to receive higher profit, higher return over the long term. Okay, so if you are a stockholder, you are expected to receive the dividend as one of the returns. Okay, you will receive dividend every year. Okay, you can also enjoy the capital appreciation, 资本利得. Okay, capital appreciation. Okay, so the value of a capital investment can increase over time. The capital appreciation is the difference between the purchase price and the sales price of the stock. Okay, so when you purchase the stock, let's assume at a price of $100 a share, $100 a share, and after a year, during a year, you will receive dividend. Okay, we assume the company has profits this year. It decided to distribute to pay the dividend. As a shareholder, you will receive dividend this year. Okay? The next year, at the beginning of the next year, when you decided to sell out this stock, okay, if at that time the price of the stock is 150, let's say, assume 150. Okay, when you purchase, the price is 100. When you sell out, it is 150. There is appreciation of $50. Appreciation of $50. That is the capital appreciation, 资本利得. Okay, so your rate of return in equity comes from two sources. The first is the dividend. The second is capital appreciation. Of course, there's capital appreciation. It is also has. It is possible to have capital depreciation. Okay, capital loss. Capital loss. It is also possible. Okay, and so the here we want to discuss is how to choose the right stock. Okay, how to choose the right stock to invest in order to receive a positive return, right? So this is the investors' wishes. Okay, so we have to do some study, right? If you want to choose the right stock, you have to do some study. You have to spend efforts to study, to investigate. So what kind of approach that we can apply to investigate, to study? Okay, there are fundamental analysis and technical analysis. Okay, well, I guess all of you probably heard these two approach. Fundamental analysis, 基本分析. Fundamental analysis, investors often use fundamental analysis to assess the financial. So basically, we use when you want to choose a stock to invest. First of all, if you started from investigating the financial statement, okay, to assess the financial health and prospect of a company, then you are using a fundamental analysis approach. Okay, so this analysis includes evaluating financial statement, right? So first of all, you have to collect financial statement, 财报表, okay, financial statement. You have to do some calculation to find out the key ratios. Okay, so you use the figures in the financial statement and to calculate the key ratio. Some of the key ratios later we will introduce. Okay, then other metrics to make investment decisions based on the information from the financial statement, from the key ratio, you decided which stock to invest. Okay, so if you apply this kind of approach, this is the fundamental analysis. Okay, the second approach is a technical analysis, 技术分析, 基本分析跟技术分析. Okay, technical analysis. What is technical analysis? Technical analysis involves studying the historical price chart. The stock price chart, trading variance, and various fundamental indicators to predict future price movement. Okay, so if you are a proponent of technical analysis, okay, 假如你是就习惯用这个技术分析，你是技术分析的拥护者的话， basically. All you have to do, you don't have to look at the financial statement, okay? If you don't understand how to read the financial statement, Okay, you don't have to. Well, just use the technical analysis. Okay, so in technical analysis, all you have to look at is the historical price chart. Historical price. Look at the historical stock price. Okay, and also the trading variance, historical trading variance. Use the price and the variance to apply to the chart, to use the chart to see the future movement, the future trend. Okay, based on these charts, these trend, you decided, you make your investment decision. Okay, so you don't have to use the financial statement. You don't have to calculate some ratio. Okay, but in the price chart, in technical analysis, you do have to do some calculation, but use different figures. Okay, in technical analysis, basically you use the price, you use a variance to calculate some of the ratio or some of the figures in order to put these figures to the chart and using the chart to see the trend. Okay, to see the trend. Okay, and you assume when you apply the technical analysis, basically you assume the history will repeat by itself. History will repeat. 历史会重演. Okay, if you apply technical analysis, it means you believe the history will repeat by itself. Okay, so these are the difference between fundamental analysis and technical analysis. Okay, so active investment can be held for long term or traded in the short term. So if you are believe in the long term investment, okay, basically probably you will apply fundamental analysis. If you want to invest in a very short period of time, okay, in a very short period of time, probably it is better to apply the technical analysis to find some short-term trend, to find some short-term trade, to ride on the trend to make some profit, quick money. Okay, so that is the difference. So long-term investor typically focus on the fundamental of the company. Okay, so it will based on the fundamental analysis to make decision. Okay, and the short-term trader, if you are a short-term trader, okay, they normally will rely more on technical analysis and market segment. Okay, market segment. Okay, so later we will also, I'm not sure whether we have time to introduce these different investment styles or not. Okay, but I will try to. If we don't have time, I expect you to study at home. Okay, to study at home. These are different styles. It is not very easy. It is not very difficult to understand the difference between each investment style. Okay, so let's first to discuss the fundamental analysis. Okay, the fundamental analysis is a method used to invest by investors value the intrinsic value. Okay, so when you apply the fundamental analysis, the essence of fundamental analysis to find out what is the intrinsic value. Okay, intrinsic value, 真实价值. Intrinsic value is different from the market value. Market value, 市场价值. What is market value? The market value is the value, the figure show on the screen, every day's screen. So every day since the the stock are traded in the exchange, right? Okay, so every day the market value, the market figure, the market value will be different. However, those market value just reflected the market sentiment. Okay, market sentiment, and sometimes these market value could be manipulated by large trader, right? Could be manipulated by trader. Okay, so basically we assume the market value probably did not reflect its real intrinsic value. Intrinsic value， 市场价值跟真实的价值，市场价值就是每天你在荧幕上会看到的，对不对？然后这市场价值可能会失真，所谓失真就是有时候被大股东去操纵，哦，那是不是能够显示出它真实价值呢？不一定，哦，不一定。所以 when we apply fundamental analysis, we try to use those real figures to find the intrinsic value of the company, 真实的价值。So by examining its financial and non-financial factor. Okay. So how do we process the fundamental analysis? Okay. First of all, we need to have financial statement. Okay. Financial statement. You have to collect a financial statement. Is it easy to collect financial statement? Well, it is not difficult. Okay, you can process, you can access the financial statement from the website. Every public listed company should have an official website. In the official website, the company should upload the financial statement there, right? Okay, so it is not very difficult to collect those financial statement of a public listed company. Okay, what kind of so you use the financial statement to evaluate the company's health and performance. Okay, what kind of financial statement? First is income statement, 损益表, right? Income statement. I guess I heard some of you graduate from the accounting department, right? Okay, so all of you probably have the background in financing accounting, so you know what is the income statement, 损益表. Okay, so from the income statement, it is also known as a profit and loss statement. So from the income statement, you will know the profit or loss of the company. Okay. This is the income statement. So at the end of the income statement, you will see the net income. If it is positive, it means the company generate a profit this year, right? Okay, so this is the income statement. Okay, the second financial statement is the balance sheet. 资产负债表，对吧？ Okay, balance sheet. Okay, the balance sheet display a company's asset, liability, and shareholders' equity at a given point in time. So from the balance sheet, you will find the company's financial position, including its resource obligation. So if you want to find out the company, okay, well, from the income statement, you might see the company generate a lot of profit this year. But, well, if you want to generate a huge profit, you need to use a higher capital level, right? So you want to find out what are the capital, what coming from? What does the capital come from? Okay, for this company. Okay, so then you will have to see the balance sheet. from the balance sheet, you know how much money, how much capital the company borrowed. What is the percentage compared to the debt compared to its asset? Okay, so how much come from the equity? Okay, it raised the capital from the equity markets. Okay, so both of the debt and the equity are the two sources of capital, right? So you have to look at the balance sheet. Okay, so this is the typical balance sheet. The left-hand side is the assets. Left-hand side is assets. The right-hand side is liability and equity. So these are the assets. These are the company's assets. Company used to operation to operate the company, right? Okay. So if you need to have these assets, you need to have money to purchase these assets, right? Where does the capital come from? It comes from liability, and it also comes from the equity. Okay, so at the right-hand side, 在右边, at the right-hand side is the source of capital, 资金的来源，资金的用途。右边、左边是资金的用途。你要用这么多的资产，你要有钱去购买啊，钱从哪里来？钱从这边来。Okay, right hand side. Okay, there is also another, the third. Well, the third does not mean it is less important. Does not mean it is less important. Well, this cash flow statement is also very, very important to see the cash flow, cash inflow and cash outflow of the company to judge whether the company can generate enough cash flow to pay its obligation. Okay, so this is the cash flow statement. So the cash flow statement tracks the flow of cash into and out of the company. Okay, it also helps the company's ability to generate cash and meet its financial obligation. Okay, so it is very, very important. As an individual investor, if you want to focus on the long-term investment decision, you need to learn how to read the cash flow statement. What kind of information can you read from? Can you tell from the cash flow statement? This is the what you have to learn. Okay, this is the typical cash flow statement. Okay, well, we're not here to teach how to read the financial statement. Okay. The next components in fundamental analysis is so after you collecting all these financial statements, the next things you have to do is to calculate some of the key financial ratio and metrics. Okay, you need to know how to calculate and what is the definition of each ratio. Okay, some common ratio include price to earning ratio, means the PE ratio, right? PE ratio and price to book ratio and earning per share. Okay, P ratio is very important. Okay, P ratio. P means the price, means the market price. E means the earning. Earning means the earning per share. So basically, PE ratio. P ratio equal to the price, the market price. Okay, the market price divided by earning per share. Earning per share. Okay, divided by earning per share. Well, later on when we introduce investment, different investment style, Most different investment style based on the PE ratio. Okay, based on PE ratios to distinguish. Okay, so you have to calculate any ratios, any key ratios that you want to check. For example, you wonder how high is the debt ratio of this company. Since the debt, if the company have a very high debt level, it means the risk of the company is very high, right? Okay, if the debt ratio is high, okay, it means, well, the company might have the risk of not able to pay its debt on time. Okay, then it is very risky. The company is very risky. It may not deserve to invest, right? Okay, so you have to know how to calculate the debt ratio, right? Debt ratio 债务比例. Okay, so debt ratio. How to calculate the debt ratio? Okay, so basically debt ratio equal to the debt, okay, including short-term debt and the long-term debt, debt over total assets. Okay, so this is a debt ratio. If the debt ratio is very high, some of the technology company they might generate very high profits. Okay, their net income is very high. However, their debt ratio is also very high. Okay, you have to compare, of course, whether this debt ratio is on exceptionally high or not. You have to compare with the peer company. Okay, you have to compare with the peers company. Okay, if all of the technology company in this industry have the same debt ratio level as this company, well, then it is okay. So since everyone has the same debt ratio, debt level, so then it is okay. It means it is known by this industry. Okay, but if only this company has such a high debt ratio, okay, then it is a warning. Okay, it is a sign of warning. Okay, you have to pay attention to. Okay, so earning growth and projection. So you probably will have to evaluate a company historic earning growth and analyze the earning forecast. Okay, so from the past performance, looking at the figures from the financial statement, you can see the trend of earning growth, and you can predict the trend in the future, right? Okay, normally we use the historical figure, historical performance to predict the future trend. Okay, that's what we do normally. Okay, besides the information from the financial statement, okay, you will also have to look at the current things. What current things? Okay, for example, the management and corporate governance. Okay, you probably have to pay attention to who is the CEO right now. Is this CEO a good guy or a bad guy? I doesn't mean that he's a bad guy with a criminal charge. Okay, I'm saying is this CEO credible? Okay, based on his past performance. Okay, so assessing the quality of the company's management team, their trade record, and corporate governance practice. Corporate governance practice such as whether the company own a very strong board of director? Okay. Does the company provide an independent director? Okay, and this independent director is trustable. Okay, all these informations are also kind of things to evaluate. Okay, to evaluate. Okay, you also have to look at the competitive position and industry analysis to see what is the position if you put this company in the industry. What is the position in the industry? Is this company an industry leader? Okay, for example, if you evaluate TSMC, obviously TSMC is the industry leader, right? Is a leader in this industry. Okay, so this is a very important information. Very important information. Okay, so there are several steps. When you apply the fundamental analysis. Of course, the first is to gather information. Okay, which means you have to gather information such as financial statement. You have to gather information about this industry, right? And the corporate governance structure of the company, or the management team of the company. Okay, those informations are that you have to collect it. Okay, after collecting all this information, you assess the financial statement to calculate the key ratio, calculate financial ratio. From this ratio, you can see some kind of a trend or see some more detailed information. Okay, and then examine your earning and growth. Also, from the financial statement, you can see the trend of the company's earning. Okay, so you examine whether this company has the potential to grow in the future or not. Okay, and evaluate the management and governance, and then analyze the industry and competition. All these steps and needs those information you have collected. Okay, the more information you collected in each step, of course, the detailed information, the detailed inside information you might get, right? In order to help you make your investment decision. Okay, so finally, you have to decide it and intrinsic value. Intrinsic value. You have to, based on those the analysis you have done, those efforts you have spent. Okay, the goal, the target is to find out a figure. What figure? The intrinsic value. Okay, the intrinsic value. So you have to estimate the intrinsic value. Well, you might wonder how to find out, how to decide it, the intrinsic value. How? Well, later we will introduce two methods, two approach. Okay, so after you find out, use some methodology or approach to find out the intrinsic value. The last step is to compare this intrinsic value with the market value. Okay, since you believe this intrinsic value is a real value, then the market value is just the price, is the figures that has been manipulated, right? It's manipulated. So you have to compare these two. Okay, if the market value is bigger, is greater than the intrinsic value, okay, it means, well, this price, this stock has been overvalued. right? Okay, use it this way to make your decision. If the stock is overvalued, you should sell it, right? 如果你比较的真实价值跟市场价值，市场价值比较高，那真实价值比较低，那代表在未来任何事情都会回归到真实，对不对？这个是假的，市场价值是假的，真实价值是真的。当大家真相总会大白真相总会大白，所以意思就是说，现在大家被蒙骗了大家被蒙骗太高了，未来会低，所以你现在就应该赶快卖，趁高的时候卖，对不对？Okay, so use it this way, you make your investment decision whether to buy or sell, right? Okay, so these are the steps in fundamental analysis. Okay, so exactly how to decide the intrinsic value. 这个真实价值怎么找出来？就一个数字，这个数字怎么找出来 ？How to find out the intrinsic value? Okay, we provide two methodology to approach to find out the intrinsic value. The first is discounted cash flow. I believe all of you probably have taken investment courses in the past. So you might have some background in this methodology, right? Discounted cash flow. How many of you heard of discounted cash flow? 有多少人听过这个 discounted 折现法？有没有？有听过哈？有没有没听过 ？Does anyone does not have an idea about discounted cash flow 折现法？应该大致上都有听过了哈，都有听过，只是怎么计算可能要稍微回复一下。Okay, the first is the discounted cash flow, and the second methodology is the PE ratio method. Use the PE ratio to evaluate the intrinsic value. Okay, so the discounted cash flow and PE ratio. So PE ratio basically you assess comparing a stock's current price to its earning pressures and to estimate the stock's intrinsic value. Okay, so let's very quickly introduce what is the discounted cash flow method. Okay, so using a discounted cash flow base, you have to first of all, you forecast the future cash flow. Forecast the future cash flow. Okay, so you have to forecast in the company's future cash flow, typically for a specified time horizon, such as 5 or 10 years. Okay, you have to focus. How to focus? Okay, you have collected all of the information, including the financial statement, including the industry trend, right? You have collected all of these information. Based on this information, you can estimate, you can forecast what are the future cash flow of this company. Okay. Well, if you don't know how to forecast, well, maybe you can find some information from the Google, from the internet. The market analysis will do that for you. Okay, all you have to do is to find out, to search in Google. Okay, to find out the forecasting of the company's cash flow. Okay, so we assume you know how to forecast the cash flow of the company for the next 5 years, maybe 10 years. Okay, let's say 5 years enough. Okay, so the first step is to forecast the future cash flow, and the second step is determine the discount rate. Okay, discount rate. You have to discount. Since those future cash flow are just future cash flow, you have to discount those future value to the present value, since we are supposed to make an investment decision right now, right? Right now, we have to compare, we have to distribute those future value back to the present, and then compare to the present market value, right? Okay, so discount rate. So what is discount rate? How to determine the discount rate? The discount rate is the rate of return that the investor requires for taking on the risk associated with the investment. Okay, so for example, you want to invest in the stock market. Generally, the stock market rate of return you expect every year you can gain 10% from the stock market. Okay, 10% from the stock market investment. Okay, then you can take this 10% as the discount rate. So this discount rate is also equal to, in some question it will write as the required rate of return. Required rate of return. We use the required rate of return as the discount rate. Okay. Number 3, when you have these two information, future cash flow and discount rate, you also have to choose. And then the next step is to calculate the present value. Okay, calculate the present value. How to calculate present value? You use the future cash flow divided by 1 plus R. This R is the discount rate, required rate of return, and power of T. Okay, for the first years, cash flow is discounted by power of 1. And for the cash flow in period 2, you discount it by 1 plus R power of 2. Okay, for the period cash flow of period 3, you discount it by divided by 1 plus R power of 3. Okay, using this way to calculate all of the present value, or to discount all of the future value into present value. Okay, and then you sum all of the present value. Okay, you add all of the present value together. And finally, you also have to pay attention to the terminal value. Terminal value means if your cash flow projection only go out for a limited number. Okay, since we only estimate the future 5 years. Okay, the future 5 years. Well, this company does not die in 5 years. The company might live longer than 5 years. Okay, longer than 5 years. But we only estimate the next 5 years, the cash flow of next 5 years. Okay, it is therefore you have to decide it after over year 5, what is the value of this company, right? Over year 5, if you sum all of the cash flow to year 5, what is the value? What is the terminal value? Okay, of course you also have to discount this terminal value into the present value. Okay, you also have to do that. Okay, and then finally you add all of the present value and also the terminal value. The terminal value also have to be discounted into present value. You add all of the present value together. Okay, so this is the interest value. Okay, interest value. Okay, so now we use this first approach to calculate the interest value. Okay, well, let's use an example to illustrate how to use the discounted cash flow methods to find out the intrinsic value. For example, the company, ABC company, this is a technology company, and the free cash flow projection, we project free cash flow for the next 5 years. And the discount rate, okay, well, there is another way to determine the discount rate. We use a weighted average cost of capital when I introduce this term here. Okay, anyway, 10%. Okay, discount rate, we use 10%. Okay, so first step is to project it, to forecast the future cash flow for the next 5 years. Okay, if we already know the company very well, okay, based on the financial statement, based on every key ratios we calculate, we find out it is reasonable to estimate that the year 1 the company will generate 50 million. Okay, the cash flow will be 15 million. Year 2, 60 million. Year 3, 70 million. Year 4, 80 million. Year 5, 90 million. Anyway, this is what we estimate for the next 5 years cash flow. Okay, so the second step is to calculate the present value of the cash flow. So, for example, year 1, the company generated 50 million. Okay, so you divide by 1 plus 10% power 1, so equal to 55.55 million. Okay, year 2, the company generates 60 million. Okay, you divide by 1 plus 10% power 2, equal to 49.59. Okay, you calculate every present value and add these present value together. So sum the present value. Okay, so equal to 254.79. Well, this is not the real. In this case, in this example, we didn't say anything about the terminal value, right? We didn't say anything about terminal value. Okay, so it means, well, maybe this company will disappear. Will disappear at the end of year 5. Okay, so there is no terminal value. There is no terminal value. Okay, anyway, so in this example, there is no terminal value. Then, in this scenario, the intrinsic value equal to all of the present value you add together. So the intrinsic value is around 254.79 million. Okay, so this is how we apply the discounted cash flow approach to estimate the intrinsic value. Okay, well, if we apply this approach to the stock market, okay, for example, well, I believe this is a very easy question for most of you. Okay, for example, you wonder whether TSMC is worthy to invest. Okay, so first of all, you have collected you have see the TSMC's market value, market price. What is the market price of the TSMC? TSMC 的今天多少钱？收盘价？580 TSMC 台积电570. Okay, so the market value is 570. Okay, we assume you have collected the financial statement of TSMC. You have read all of the information about TSMC, and you estimate. Okay, you estimate if you invest in TSMC. Okay, what can you receive? What is your payback? Okay. First of all, you probably will receive the dividend. Okay, according to the dividend policy of TSMC in the past. Okay, right now TSMC pay $2.5 every season. It means TSMC pay 2.5 times 4 equal to $10 a year, right? Right now, okay, we assume the company TSMC might pay fixed dividend, okay, in future. So it means TSMC pay dividend. Okay, for the next year, we assume next year the economic prospect is not very positive, but at least we believe. Okay, after studying all the information, we believe TSMC will maintain the same dividend policy. Okay, for the next year, year one. Year one means next year it will also pay $10 dividend. Okay. And year 2 means 2025. Okay, we assume the economic trend climb a little bit. Okay, so let's assume $12. You will pay a yearly dividend of $12. Year 3, okay. Keep rising. Okay, let's say 15. Year 4, we assume China does not invade Taiwan. Okay, Taiwan still survive. Okay, and TSMC still survive and still stand very strong in Taiwan. Okay, so in that case, TSMC will become not one of the most powerful company in the world. Okay, so you pay let's say $20. Okay, we assume in year 3 years or 4 years, China will not invade Taiwan. Okay, and year 5. Okay, well. When every company reaches the top, it will start to decline a little bit. Okay, let's say 16. Okay, we estimate the dividend of next 5 years. Okay, that will be enough. Okay, after that, at the end of year 5, we assume at that time, okay, if you expect to invest dividend, if you plan to invest in TSMC, okay, you have already forecast the future dividend, and you expected to sell the stock at the end of year 5. At that time, at year 5, you expected the terminal value at year 5 will be, let's say at year 5, let's say 800. Okay. After the 5 years growth, okay, TSMC has the potential to grow. The stock price has the potential to grow to $800. We assume. Okay, so okay, and also we have to decide rate of return, the discount rate, right? The discount rate. We assume the discount rate equal to 10%. We expect the discount rate will be 10%. Okay, so based on these information, so the question is, buy right now, you buy or sell? Okay. Well, do you understand the questions? This is homework, group homework. Okay, using the DCF approach. Okay, come on, it's very easy, very easy. Use Excel. Use Excel. If you know how to apply the DCF, it won't take you 1 minute. 1 minute. Okay, so you have to, first of all, you have to decide the intrinsic value, and then compare to the market price. Right now, you have to make the decision, right? You have to make the decision right now. So all of the information should be discounted back to the present, to now, right? To now. And add all those present value together, including the terminal value. Terminal value is, you assume the terminal value at the end of year 5 is $800. Okay, so this is the terminal value. You are supposed to sell the stock, sell TSMC at the end of year 5 at the value of 800. Okay, so decided the intrinsic value and compare with the market price right now. Okay, if the intrinsic value is bigger than the market value, it means you have to buy or sell. Okay, if intrinsic value intrinsic value bigger than the market value. Okay, means the real value greater than the market value. Everything in the end will go to the intrinsic value. So, for example, right now its intrinsic value is 600. Right now the market value is only 570. It means the current market value still has the potential to grow to 600, right? Everything will, in the end, will go to the intrinsic value. So right now it is only 560. Okay, so right now you have to buy and hold, right? Buy. Right now you have to buy and wait for 5 years to gain the capital appreciation, and also the 5 years dividend. Okay, so if the intrinsic value less than the market value. Let's assume when you add all these present value up, you have only 520, but right now the market value is 570. It means right now the market value is bigger than the intrinsic value. The market, the stock price is overvalued right now. In the end, in the future, 570 will goes down, and at the year 5, it will goes down to 550. So now you have to sell right now, because right now it is overvalued. It is at the higher point. So you had better sell it right now. Otherwise, if you waited for another 5 years, the price will go down to 520. Right? Okay. So this is the DCF. So this is a very small homework for today. Group homework. Okay, group homework. So you can use the Excel to very easy calculate. Okay, I believe most of you should not have questions. Okay, homework, group homework. Okay, and we don't have time to introduce more, especially the second P ratio. Okay, well, the P ratio is actually very simple. Okay, P ratio. Okay, anyway, we spend a couple of minutes. So first of all, if you want, this is the second approach, right? Second approach, you find out the intrinsic value. So first of all, determine the appropriate P ratio. Okay, you compare this company you are supposed to invest with the peer company. With the peer company. Peer company means 同财. Okay, the company, those company in the same industry. Okay, not only in the same industry, but the company size should be similar. A product should be very similar. Okay, you find out those companies. Those are the peer company. Okay, based on factors such as the company industry, the growth rate is also quite similar, and the risk is quite similar. This is often done by comparing the stock to a similar company in the same sector. Okay, you find out those company. If those companies are, again, also the public listed company, it is better. It is better. Why? Well, because if they are, those similar companies are public listed company, it is easiest to get information to find out their financial ratio, financial figures, right? Okay, so how to we assume you have already found out those peer company. Okay, so how to calculate the intrinsic value? So when you find out those company, you already know the P ratio of the company, right? Okay, we assume since we are very similar, right? We are very similar. So my P ratio should be similar to yours, right? Okay, since we are similar, we are friends, we are brothers. Okay, we are brothers. All your information is very close to mine. Okay, your P ratio, of course, should be very close, very similar to mine. Okay, so I will use your P ratio as my P ratio. Okay, so the intrinsic value, as we say, the P ratio equal to. Okay, as we say, PE ratio. How to calculate P ratio? P ratio equal to the earning per share and the market value or the intrinsic value, the value. Okay, the value no matter it is a market value or intrinsic value, anyway. Okay, so this is the earning per share. So the implicit the value, so it should equal to PE ratio times earning per share. Okay, so this P ratio is estimated future chosen PE ratio. Okay, when we compare with a similar company, okay, we choose the chosen P ratio, and then you estimated your future earning per share. Okay, your earning per share. Then we can estimate the intrinsic value. We can estimate the intrinsic value should be equal to what? Okay. Then you compare the intrinsic value to the current stock price, and based on these decision rules to make your financial investment decision. Okay. Well, this is example. I believe it is very not very difficult. You can look at this example. Okay, so in here the intrinsic value is 52.50. Okay, and the market price right now is only current stock price is 50. Okay, so intrinsic value is 50.50. It means right now you should buy, right? In the end, the current stock price will goes up to 52.50. Okay, so right now you should the stock maybe right now it is undervalued, so you should purchase, you should buy. Okay, so so these are the two methodology we apply to find out the intrinsic value. Okay, so this is the small homework for this week. Okay, group homework. And next week we will continue to discuss very briefly about the technical analysis and different investment style. Okay? And next week we still have Kaho Kim, so please study fresh what we have introduced a little bit. Okay. Is there any question? No? Okay.